Welcome to Business Morning. I am BC Adebayo. Oil prices are lower today, but still trading around $45 per barrel due to worries that fuel demand growth will drop amid a resurgence of coronavirus cases. Brent crude fell 0.1% to $45.03 a barrel, and US WTI crude futures slipped 2 cents to $41.93 a barrel after both contracts had earlier traded higher. However, WTI and Brent are both set for weekly gains of at least 4%, the most for the two benchmark contracts since the week ending July the 3rd. The resurgence of coronavirus infections remains the main uncertainty in the oil market, as that will determine how fast fuel demand rebounds. And back home, the Central Bank of Nigeria's framework on integrated non-interest window for all the intervention programs aims to support businesses and households that have been impacted negatively by the COVID-19 pandemic. The framework was first announced in June 2020 and subsequently made public late July. Well, since the release of the guidelines for 11 of its initiatives, not all members of the investing public seem to know enough about the program. That's why we're being joined now by the head of Islamic Law Department at the University of Ilorin and a member of the Financial Regulation Advisory Council of Experts to the CBN, Professor Abdulrazak Alaro, to drill down on the objectives of the non-interest window for the Apex Bank's intervention schemes. Good morning and thank you for joining us on the program. Well, the CBN has already has the conventional intervention schemes that have been overwhelmingly subscribed to by members of the public. Tell us, why is it necessary to integrate a non-interest window?
Oh, thank you very much, and good morning to everybody. Well, as you rightly said, the introduction of interventions in key economic sectors is not a new phenomenon altogether. It has been there always. But why, as you ask, why did we need the non-interest window to also be introduced? Yes. Well, you said the already available interventions have been overwhelmingly embraced, well, to a large extent. But I want to draw the attention of all to the fact that we are speaking of a country of over 200 million citizens. So if you look at the figure, I beg your pardon, if you look at the figure of who have actually embraced those interventions up till today, it will be a very small fraction of the Nigerian citizens. And this actually is a reflection of the larger picture of the financial landscape in the country, particularly in terms of who is included and who is excluded. As we speak today, Nigeria still have one of the highest rates of financial exclusion in the world. That is the fact. We are not even comparing ourselves to countries in Europe, countries in America. Let's even look within the continent itself. Nigeria, despite being the largest economy on the continent, still records a staggering rate of more than 30% of financial exclusion. If you take a country like South Africa, also on the continent, which has a smaller compared to our own economy, but it has successfully managed its own financial exclusion and reduced it to the bearable minimum of just 7%. So with this, you will see that there is need for us to improve on our performance in capturing more and more citizens of Nigeria, and this is the thrust of what this particular version, non-interest version, has come to achieve, to get more Nigerians on board, and that will be very good for the system, which will be very good for our economy. If you compare, you just oppose the two figures that I've just given you. Nigeria recording more than 30% of financial exclusion, excluding 30% of the adult population of the country in the formal financial sector. That does not speak well for any economy. You look at South Africa, on the other hand, just 7% is very, very manageable. This may give you an insight to some of the reasons why, despite being the largest economy on the continent, we are still struggling economically as a people. So there is a strong need for the introduction of non-interest windows to capture more and more Nigerians. Secondly, if you look at some of the objectives of these interventions, whether they are conventional or non-interest, one of the key objectives is poverty alleviation, job creation. Um, you cannot successfully manage all this. You cannot claim to have reduced poverty to a bearable, a tolerable limit when you have a large percentage of your population still excluded in your financial interventions. And this is the truth. This is the reality. Financial exclusion is always said is either imposed or a matter of choice. What we have observed in the country is that our own financial exclusion in most cases is imposed, meaning that we have willing, we have qualified, we have competent and able Nigerians who are ready to assess the interventions, but on account of their ethical preference, religious belief, they are barred from assessing them. So you cannot also achieve your target of reducing poverty, of creating jobs for the larger society of the citizens of Nigeria when you are not looking at those very large number of your citizens who are still excluded from all your interventions. In the part of the country where I come from, we have a proverb that says, if you have one wealthy individual in the midst of 6 indigent, you have only succeeded in having 7 poor men or women. They are all poor. So the earlier the better we start thinking along that line, that it is not a matter of just taking a very small fraction of the citizen when we are talking of economic empowerment, when we're talking of poverty alleviation, we are talking of job creation. It has to be something that reaches as high as possible of the number of the citizens of this country. So,
Professor Alaro,
those are part of the reasons.
yes, you've talked about the key objectives of this now, but tell us, are the programs totally different from the existing intervention programs, or the non-interest window is only integrated into the existing schemes?
Okay, yes. Yes, they are not different in any way except in that one way. The interventions that have been introduced up till this moment, before the recent ones, they are all interest-based. These new interventions are only embedding the non-interest version into the scheme. So to answer your question straight away, they are not different from the interventions that are already in place, but they are different in their way of operation. Those interventions are interest-based, while this one is non-interest. I need to mention something here. When people hear non-interest, their minds usually go to a loan being given without any amount of interest or return being paid. That is not true. What CBN is introducing is a form of, is a way of financing in a non-interest way, which will mean participation between all parties involved. They will all participate in risk bearing. They will participate in ownership of assets involved, and that will eventually lead to the entitlement of all parties to the return or dividend or profit that is derivable from the exercise. So it is a non-interest financing, but it's not non-interest loan. It's not a loan that you will take and will not pay, you pay back as you got without any dividend or return. And this is the whole idea about non-interest financing all over the world. It's also called Islamic banking and some other climes. So it's a way of saying, look, come, let us become partners in business. We share the risk, we share the ownership, and we are all entitled to the benefit derivable from that. So that is the key difference between what was on ground before and this new introduction.
But how does the non-interest window operate? Does it operate differently from conventional offerings?
Of course. If there's no difference in the mode of operation, then you will agree with me there was no need for its introduction in the first place. So the modes of operation are very, very different. Let me put it this way. If you look at the entire structures used for these non-interest interventions, you will never see in them a way of giving out or advancing money and expecting the beneficiary to repay with a percentage of loan. But I've said it earlier that that does not mean that whether the CBN or even the participating financial institutions will stand to gain nothing. They are also in business. So the mode of operation of an Islamic financial entity is that of participation. The ownership element must be there. The ownership element will automatically mean that all parties will bear the risk associated with ownership, and in that they are entitled to the profit or benefit that will arise from that. This is premised on a golden principle that we have in Islamic law that says benefit goes with damages and revenue follows liability. A very important difference between conventional financing and non-interest or Islamic financing is the fact that if you are not liable in a way, you cannot claim to any profit or benefit. But if you are ready to take risks, to participate, and that is why this form of financing is mostly concerned about the real sector of the economy, where goods and services are provided or rendered. You must do something to earn anything. You must participate, you must bear risk, and that will entitle you to a profit or benefit derivable. Coming into more details, to achieve this, there are a lot of contracts, Sharia-based contracts that are used all over the world. You know, this issue of non-interest financing is not peculiar to us as a nation. In fact, as I'm speaking with you this morning, at the last count, we have almost 1,500 entities all over the world operating this form of financial interventions in more than 80 countries. So they have their own structures, they have their own contract that they use, and those are what have been exactly used in structuring this product. It may sound too technical to our audience at home, but let me just mention some of those contracts. For example, we have in the Anchor Borrower Program a structure that is called Salam and Parallel Salam of Islamic financing was actually used, which will mean, in essence, a two-layer or two-tier contract. On one part, between the Central Bank of Nigeria and a participating financial institution, which will use the original Salam. The other one is what we call parallel Salam, and that one will be directly between the beneficiaries, citizens of Nigeria, and any participating financial institution. Since these interventions, the new ones, are non-interest based, the only participating financial institutions that can key into these are the non-interest financial institutions, the licensed non-interest banks in Nigeria. So that is just one example. In other, we have up to 13, not even 11. It's about 13 interventions that have been released so far. The new ones, 11, but there are 2 others, I believe, that have also been offered before. Another structure that was used as a contract that will give the same result, the result of being participant in the economic sector, contributing together, bearing the risk, owning the asset involved, and thereby being entitled to the dividend of profit. That is what we call mudaraba. That one was used to structure, like, for example, there is a particular intervention for the healthcare practitioners, those who are in the health sector. It was structured in such a way that it will also be 2-layered. There will be what we call restrict mudaraba, because it involves a kind of working capital intervention. So it will be a restricted mudaraba between the Central Bank of Nigeria and the participating financial institution. Why those financial institutions already they have in stock many contracts that CBN has approved for them in dealing with their various customers. So they are free to choose any of those ones, like the one I mentioned a short while ago. Salam is there, Istisna is there, Murabaha is there, Musharaka is there, Mudaraba is another one. So they will just choose any of those contracts that have already been approved for them by the regulator, the central bank.
All right, Professor Alaro, of course, you've given us a breakdown of how it works, but I'm sure many would also like to know those who are eligible for this non-interest financing. Is it open to non-Muslims as well?
Thank you very much. That's a very important question. Non-interest financing all over the world is not meant for Muslims alone, not only in Nigeria. If you go to Britain today, in fact, Britain had its own Islamic bank ever before we had one in Nigeria. It was called Islamic Bank of Britain many years before we started having our own in the country. When you go to the World Bank today, it's a global institution. World Bank has a unit, a division for Islamic banking. And interestingly, that unit is headed today by a Nigerian. If you ask me, I will tell you he's a Christian Nigerian. It's not even a Muslim. The man that is heading the Islamic, they call their own Islamic, not even non-interest, at the World Bank. So this is to allay the fear, the unfounded fear of saying this is just for Muslims. No, it's not true. It's there for everybody that is ready to key into the structure, how it works. It's not a matter of advancing loan and expecting the beneficiary to pay back, irrespective of what the businesses go through or what the money is used for. No, it has to be participatory. So that is one. Then number two, when we talk of non-interest, I think we need to educate ourselves. It is not only in Islam that interest is forbidden. Yes, we have verses of Al-Quran Al-Karim, the Noble Quran, that prohibit non-interest. But I can authoritatively say that we have in the Bible as well. We have in Exodus, in Leviticus, in Deuteronomy, and some other verses of the Bible that equally prohibit dwelling in interest, either taking or giving. So in essence, this intervention and all other financing initiatives of non-interest financial institutions, either in Nigeria or elsewhere, are never meant for Muslims alone. Anybody that is mindful of ethical preferences, also religious beliefs, is interested in participating in the risk sector of the economy, this form of finance is the way to go. And that is why it has been thriving year in, year out all over the world. Like I told you, we have in more than 80 countries of the world today where this kind of financing or banking has been embraced.
Now, in terms of terms and conditions now, this has to be profit sharing as opposed to interest rates application, exactly, just like you've told us. But tell us more about this in relation to the program.
Okay. Yes, it's participatory in nature. For example, some of those interventions actually give a cap of what is realizable as a profit. For example, in some of those interventions, CBN will allow you to go to the extent of 9%, in some 5%. These 5 or 9% will now be shared between the participating institutions, including the Central Bank of Nigeria itself. In some of those interventions, Central Bank is very magnanimous by saying I will take just 2% of whatever profit that you derive, and the participating bank will take the rest 7%. So it's a very good incentive. It's also applicable in the conventional practice that way. So it's participatory. Whatever is derivable as profit is going to be shared, and it's not going to be exclusively taken by one party. While the beneficiary on its own is structured essentially to help a beneficiary to improve on its means of livelihood, and it will be the bigger beneficiary, while the institutions participating will share, you can call it a fraction of the profit that is derivable in the exercise.
All right, Professor Alaro, please hold on to your thoughts there. We'll continue the conversation with you in just a moment. We'll be back in just a moment. Welcome back. We still have with us the head of Islamic Law Department at the University of Ilorin and a member of the Financial Regulation Advisory Council of Experts to the CBN, Professor Abdulrazak Alaro, with us talking about non-interest banking. Thank you, Professor Alaro, for sticking with us. So let's continue the conversation now. earlier on, you told us about, of course, those who are eligible to participate in the non-interest banking. But then, would also like to know what is the criteria for accessing these facilities?
Okay, thank you. That's a general question that can only be answered in specific ways. Each of those interventions has its own requirement of eligibility. So whoever, my advice to Nigerians is, if you have read through all the guidelines and you have identified the one that is most suitable for you, then go to the eligibility section of the guideline of that particular intervention. It will tell you what you need to take with you, what you must have before you can actually access. But I have very good news for particularly the teeming youth of this country. These interventions are actually very youth friendly. And one of them, the one called Creative Industry Financial Initiative, is as simple as that. A fresh graduate without any collateral, without any security, just come with your NYSC certificate and your degree certificate, and somebody of a family member that can stand for you without any requirement of equity participation of any percentage, you can access this intervention. So it's a very relaxed requirement when you look at, we compare this to what you will encounter when you go for financing in commercial banking, whether they are Islamic or conventional. So it has to, like I said, it must be answered in specific ways. Each of these interventions has its own eligibility requirement that I will advise every interested party, Nigerian citizen, to go through. But believe me, they are very friendly to every, no matter what segment of the economy you belong to. If you are farmers, there is a particular one that is meant for non-oil export. If you are engaged, because Nigeria is looking for ways of diversifying its economy. So it's also part of that. If you are into that sector, producing something that is non-oil, because we are trying to move from being a monolithic economy to a more diversified economy. So that is another way, that's another intervention that's specifically structured for the non-oil export. You may be aware, there is one that is meant for those who are in the textile sector alone. So textile sector, if you are not in that business, you are not qualified. So like I said, each of the intervention must be critically looked into, studied for any interested party.
Now, each of these intervention schemes have various objectives, just like you've talked about. And for the agriculture scheme, for example, it aims to reduce unemployment rates by engaging as much as 370,000 youths over the next 3 years. How sufficient is this target for the agriculture sector?
Well, how sufficient? Well, I will say it is not sufficient, but it's just the beginning of an exercise. Yes, I want to believe that 370,000, as I said in the beginning, when you are talking of a nation of more than 200 million citizens, is an insignificant figure, but it's something good to start with. And this is part of what I think CBN has thought of by bringing this non-interest intervention to see those who are not captured up till now, to include them, to bring them on board. You see, Nigeria is in dire need of diversifying its economy, as I said a short while ago. We need to boost our revenue base by looking into other sectors different from oil. And we can only do that successively if we are able to capture as large as possible the number of citizens who are skilled in various fields and who can contribute to the development of our economy. Look at what is happening in the world today. Look at how China is overtaking economy after economy. China has overtaken Europe, is already chasing United States of America. So it's projected that in no distant future, China will become the first economy in the world. Yes, Chinese are hardworking, you will say, but don't forget they have an advantage, and that is the large number that is perfectly working for them. On the continent of Africa, this is an advantage that we also have as a nation. We have the number. it's only left for us to try and create, just like these interventions and other schemes, that will accommodate as large as possible the number of skilled citizens of this country. And one way or the other, we may be the next China of the whole world.
Now, as for the non-interest guidelines for intervention in the textile sector now, with the provision of a 50 billion naira special mechanism, where do we have the targeted investors?
The target, they are already known. They are those who are already in the business of textile production, and they know themselves. And that is why, if you look at the guideline made specifically for this particular intervention, it was a collaboration. It was like a cooperation between the Central Bank of Nigeria and Bank of Industry. Bank of Industry actually has that list, long list of investors in this particular sector. And that is why CBN did not go directly to commercial banks to do this intervention, but it has chosen to do it through who knows better the sector and who knows, like you said, the targeted investors, and that is Bank of Industry that CBN is partnering with in introducing this particular scheme. I must mention something here. You see, in the other interventions that are going to be accessed through non-interest financial institutions, I've told you they have no problem. They already have a number of contracts that are suitable for this. But in the case of Bank of Industry, that was also critically looked into. So Bank of Industry does not have in place non-interest financial instrument or contract. And that is why in the guidelines, BOE has been mandated to assess non-interest version of the intervention in the textile sector. It has to choose one of those non-interest financial instruments to be able to key into this particular intervention for the textile sector that is non-interest based. But for knowing the targeted investors is not a big deal. BOE has a very long list of them, and that's why CBN is partnering with it.
Now, Professor, the feelers that we're getting is that the initiative is commendable, but there's one concern, and that's the fact that there are only a few non-interest financial institutions that serve as off-takers. What's your committee doing about this?
Okay. Yes, you are very correct in your observation. PC, you are very correct. Up till today, we have two full-fledged non-interest banks in Nigeria, Jais Bank and recently Taj Bank. We have two windows as well, a window of Sterling Bank and another one of SunTrust Bank. But if you compare this with the market, the huge market, financial market in Nigeria, yes, the number is very, very low. But don't forget that this is a banking system that has just evolved. So it is still developing. And we hope as we move on, we'll get more people. This is an opportunity for investors to look into this sector of the economy to invest too. It's a very promising market. I told you in more than 80 countries today in the world, they are embracing it. So we still have a long way to go. I will agree with you. The numbers are not large, but as a just evolving system, it's not something that is very bad. We started with just one, Taj Bank, about 10 years ago. They are now 4. We have a number of microfinance institutions also in non-interest based, but there is room for improvement in this. Another area that I would like to mention, since you mentioned something in relation to the non-interest banks or financial institutions in Nigeria, I will also advise them to improve on their balance sheet. Yes, the largest non-interest bank in Nigeria today has a balance sheet of less than $1 billion US. Well, to us in Nigerians, we will say 1 billion is a huge amount of money. Looking at the exchange rate of 460 something now. But believe me, in the banking world, in the financial sector, this is a very small amount of money. Maybe I would just give you 2 examples of some of the Islamic or non-interest banks in the world. If we look at Raji Bank in Saudi Arabia, it has an asset of almost 100 billion US dollars. The Dubai Islamic Bank, which is the pioneer, the first Islamic commercial bank in Dubai, has about $75 billion in assets. So we in Nigeria, we still have, we have to do more, but I think it's a good beginning. Less than $1 billion US today, but it may improve. And that is a way of telling investors who are still looking at opportunities, this is a very good opportunity for them to come and invest.
Now, how much of awareness campaign are you putting out there to promote these programs?
Well, I'm an advisor to Central Bank of Nigeria. You know, the CBN has its own publicity apparatus, and I think they should be concerned about how to disseminate information about this intervention, which I believe they are doing. On our own part, as experts, as technical counsel, we have developed the structure. We have made sure that they are truly Sharia compliant and are business friendly and are economically viable. But the issue of publicity, making them known to the members of the public, the CBN has its own apparatus for that, and I believe they will do. They are doing something that they will do more. Maybe this program is part of what they are doing. I don't know.
All right, well, since the frameworks have been released now, how much of patronage have the various schemes enjoyed?
It's too early to measure now. It was released in June, exactly about a month ago. The circular to the participating financial institutions, I realized, has just reached them 2 weeks or so ago. So it is too early to measure the level of participation now because it's something that is just starting. So maybe in the next 3 months, 6 months, it will be ripe for us to say this is the level of patronage that has been experienced in that exercise.
All right, just before you go, Prof, tell us how risk management is done in this non-interest financing.
Oh, thank you very much. This is a very key aspect of the whole thing. We are talking of risk element in non-interest financing or in non-interest banking. Is very, very important because it is through risk assumption, assuming risk, that you are entitled to profit. So it has been catered for minutely and comprehensively. The participating financial institution will have its own risk bearing element, percentage of bearing the risk. The beneficiaries themselves, whether they are farmers, whether they are graduate youths, whether they are industrialists, whether they are textile, those who are in the textile subsector, whether they are medical practitioners, they are also going to bear a level of risk because risk element, participation in risk assumption is very, very key in Islamic or non-interest financing because that is the only thing that entitles you to profit or benefit. CBN on its own part has indicated clearly its readiness to take the necessary risk. It is already spelled out in the guideline what risk is going to be taken, what level of risk is going to be taken. And that is why I mentioned the issue of collaterals and the issue of security. This is also part of the risk management strategy. Whoever is approaching a participating financial institution to assess those interventions will be asked to provide adequate and necessary collateral or security. Same for some interventions that are targeted at youth, in which those requirements are actually relaxed to a very large extent. But that does not mean they are taking anything for granted. So it's very, very important and it's been seriously dealt with.
All right, Head of Islamic Law Department at the University of Ilorin and a member of the Financial Regulation Advisory Council of Experts to the CBN, Professor Abdulrazak Alaro, thank you for sharing some of your time with us this morning. And
thank you for having me. Good morning.
Well, it's now time to review Thursday's activities at the Nigerian equities markets with Eddie Diong-Inwan. Good morning, Eddie. So the bulls are not letting go of the Nigerian equities market just yet.
You can say that the positive sentiments are not waning in the market as investors' interest in key stocks yesterday was Seplat, MTN Nigeria, and some banking stocks that drove the all-share index higher by 0.19% to 24,930.34 points. Now, that pushed the month-to-date gain to 1%, while the year-to-date losses moderated to minus 7.1%. Now, these positive sentiments have pushed us into the 13 trillion naira mark for the equity cap. Activity level was lower yesterday, as we saw 173.74 million units worth 2.13 billion naira traded in over 3,600 deals. Now, FBN Holdings was the most traded stock by volume at 29.78 million units, while MTN Nigeria was the most traded stock by value at 336.60 million naira. Now, sectors were mixed yesterday. Banking and consumer goods were up. Industrial goods and insurance shared, they declined yesterday, while oil and gas jumped by 4.36%, and that was thanks to the 9.03% on Seplat yesterday. But let's talk to Tajuddin Olayinka, a stockbroker at Valmont Securities Limited, for more. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Yeah, good morning.
Can you give us a review of trading for this week, and what is your outlook for next week?
Trading for this week, especially, looking at it from the last 5 trading days, has been that of, moderate movement. More or less, not serious movement, but at least, market has moved up a little, just about flat. So, going forward, what it means is that there have been no much activity as expected in the market, even though the market is still waiting for result of the banking stocks to see the actual performance. So for now, what we have seen this week is what we probably will still see next week until the banks start releasing their results. So obviously, market is waiting for the result of the banks to establish the trend that has that has begun. And of course, to know whether exactly, market can still move up.
Okay, speaking about market movements now, as oil prices begin to pick up a bit, do you think that would have an effect on stocks on that counter?
Come again.
As oil prices begin to pick up, do you think that would have an effect on stocks on the oil and gas counter?
Obviously, it should. It should have effect on them. It should actually have effect on this. The market is waiting for people. Once the banks results are released, you will see more, you see better pricing of securities, because banking stocks usually take the lead in the market. Then the other one is the issue of the exchange rate. Once that area is settled, you see you see more more movement. In fact, you see more influence to the market as well. Because a lot of all these foreign investors are still waiting the wing, and even the local investors are also waiting the wing, hoping to see a better price, the exchange, a better price naira.
Okay, you say activity level hasn't been so great in the market, but we've seen some gains. Now, because of the gains we've seen this week, should we be expecting the bears in the markets next week?
Like I mentioned earlier, the gain this week has not been totally bad. It's still a bit depressed. With that, I still hope to see this same positive movement, in the coming week. Next week should be a better week as soon as we begin to receive results from the banking stocks.
Mr. Olayinka, thank you for your input on the program. Tajuddin Olayinka is a stockbroker at Valmont Securities. But it's been a case of bargain hunting and profit taking at the unlisted securities market this week. Yesterday, the NSI rose by 0.57% to 706.07 points. Well, we'll have to take a break now. I'll hand over to you, Bisi.
All right, Adijang, we'll see if the markets will continue in that positive direction today. Of course, we'll be back with you, Adijang, to run us through the debt and currencies market. Plus, when we return in just a moment, we'll do an opening call to London. Do stay with us. Let us now cross over to our London studio to know the latest business headlines shaping the markets this morning. And Juliana Olayinka will be telling us. Good morning, Juliana. Foreign exchange firm Travelex has collapsed into administration with the immediate loss of 1,300 jobs. Was it all about COVID?
Yes, no. Good morning, Bissy. Well, they did collapse into administration, but they have managed to survive. They were using PwC as their administrators, and over the course of the past 48 hours, they have resurfaced with a restructuring deal. But that restructuring deal has come at a cost, and that includes actually 1,802 jobs. They've been saved, but 1,309 UK jobs have been at a loss. It was COVID, but of course, Travelex had many issues before that. Most notably was the New Year's Eve attack. They had a cyber attack by a ransomware gang, and that really took them out for a couple of weeks. They actually had to start using pen and paper, which is almost unheard of in a digitized society. And they did end up paying out. They paid out about $2 million to this company to try and take back control of their software. Now, this really set them back a couple of months. And of course, the fact that they deal in over 50 different countries with over 80 currencies, the lockdown hasn't helped because, of course, they make their source of their revenue, or the main source of their revenue, in airports. And because of the decreased passenger numbers, it's just not been profitable for them. So they brought in PwC. During those discussions, during those restructuring strategy meetings, they managed to reduce their debt load of 385 million to 160 million. They also, by selling some of their assets, saved about 85 million pounds in cash. But unfortunately, these jobs had to go. So another day and another more than 1,000 jobs that have been lost in the UK due to the pandemic.
Another big story this morning is the Sky News ambitions plan to launch a new global rolling news channel in conjunction with the US network NBC has been cancelled, and that leaves behind dozens of recently hired journalists and a half-built TV studio in London. Now, that channel had hoped to challenge the dominance of CNN when it comes on board. Any idea why the ditched plan?
Same theme, COVID. NBC, Sky, World News. This is a quiet story. It's not really picked up much noise, really. It's an industry story. And NBC, Sky, World News, who is owned by Comcast, say that it's not an indefinite decision, but it's a decision for now. Sky News and NBC wanted to collaborate together to try and dominate the international foreign news market, kind of like a mix between, as you said, CNN and BBC World News. They were relying on about 3,500 staff, really senior journalists that work in the Sky newsroom and in the NBC newsroom. But they also employed, I believe, about 100 staff. 60 of them were full-time. And this was actually being overseen by a pretty senior British journalist here called Deborah Turness, who was once a senior editor at ITV News. She then went over and started running NBC in New York. And they had the dream, but COVID appears to have scampered that dream. We don't know whether or not this is going to be indefinite. I've heard from people that I know actually who are employed to work for them that many people have actually got jobs elsewhere. But again, this is a very industry story. There isn't much news on it because we wasn't sure of whether or not this was going to be a competitive news channel anyway. There are some suggestions that this could be linked to one senior figure who left NBC News earlier this year, who was a big part of the production. I don't know if our viewers will be familiar, but NBC has been caught up in the Me Too scandal involving some of their senior execs, in fact, involving some really big names on TV, actually, who were accused of molesting and sexually abusing some staff members. They managed to clear that earlier this year before COVID hit. But yes, so NBC Sky World News has been put on hold for now.
All right, finally, Juliana, more than 10,000 BMW plug-in hybrid cars on British roads will be able to automatically swap to battery power when entering low-emission zones in London or Birmingham city centres from today. What more can you tell us about this?
Well, this is very much a tech story, but there is new technology that has been built into the latest BMWs, and they will be able to switch to battery power if they go into emission zones. There are some emission zones within London and within Birmingham, and if you have the brand new latest BMW, your satellite navigation will be able to switch from being a hybrid car that pumps loads of fuel to being an electric vehicle. This is the future. This is where all cars are going. I believe earlier this year, Prime Minister Boris Johnson said that from a certain time, I believe it's 2030, that all cars in the UK will be electric. There will be no more of those fuel pumping cars. Germany are leading the way with this. Multiple cities across Germany are already emission efficient. If you drive within those areas, your car must make sure it's not emitting all of these greenhouse gases. And so the technology is available in Britain.
All right, Juliana, thank you. We'll see you in the afternoon.
Thank you.
And it's back to Eddie Dion for a review of the debt and currencies markets. Over to you, Eddie.
Thanks, BC. At the fixed income market, the bond market closed on a positive note as average yields across the curve declined by 53 basis points. Now, yields on the short and long tenors declined, while yields on the mid tenor was unchanged. There were 21 deals worth 9.60 billion naira on that counter. Trading in the Nigerian Treasury bills market was flat yesterday as average yield was unchanged at 1.7%. And that's evident on the activity chart as we saw just 3 deals worth 750 million naira on that counter, while at the automobiles market, that segment of the market closed positive yesterday as average yields contracted by 4 basis points. Now, average yields across the mid and long term declined, while yields on the short term maturities were unchanged. There were 30 deals worth 167.65 billion naira. But let's have a chat with Gbemisola Bello Aromire, a fixed income dealer at UBA, for more on the fixed income markets. Good morning, Gbemisola. Thank you for joining us on the program.
Thank you for having me, Edita.
How would you say the fixed income market has performed this week?
From Monday, which we had huge liquidity in the system, it had initially opened bullish, I beg your pardon, and this made some of the yields to trend lower. However, at the start of the week, we saw debits for the CRR and also for the FX. This turned the market sentiment into a bearish one. We've seen a bearish pattern from Tuesday till today, and the bearish pattern could be largely attributed to the illiquidity in the system. Yesterday, however, market was largely muted as there were no real fundamentals to support the market. What we see is that there is no OMO auction. We've not seen an OMO auction in the last 1 month, and this has triggered scarcity of bills in the secondary market. Because of this lack of OMO auction, we've seen activity on September, October, and December bills, and these rates are trading between 2% and 3%. We saw activity on 23th of May yesterday on the long end, and this traded around 4% to close yesterday. For the bond space, the bid and offer spread is a bit wide, but however, we're still seeing a lot of activity there. We've seen a bullish run as yields also crashed lower yesterday. We saw activity on the 2034, and we also saw activity on the tail end, the 2050, which closed around 10% levels for yesterday.
So what's your outlook for next week? Should we be expecting the market to still be muted?
For next week, we see a pickup in activity. We're hoping that there will be an OMO auction next week because there is an OMO maturity of almost 142 billion. We also have an NTB maturity of almost 56 billion too next week. So we intend to run on this notion that activity will pick up on that end. There is also a coupon payment on the 13th of August of 47 billion. All this coming into the system would trigger traders to pick some of the bills that have attractive yield on their end. So we see a much active market next week based on the amount of liquidity that will come into the system, and we hope that we'll have more bills to trade by this time next week. All
right, Gbemisola, thank you for your input on the program. Have a great weekend. Gbemisola Bello Bromire is a fixed income dealer at UBA. Well, that's it on the market review for the week. We'll hope for a profitable trading day today. Over to you, Bisi.
As always, Eddie, thank you. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.